This is our Forex blog for September 9th, 2011, and like most days, we really want to buy the strong currencies and we want to sell the weakest ones. It's pretty clear looking at our currency meter that the dollar is the strongest. Underneath the real-time bar-by-bar analysis comparing the dollar to all the pairs on the bottom, we have the intermediate time frame trend, which is up, the daily trend that's strongly up, the weekly trend that's up, and the monthly trend that's up. Pretty much what I like to call a no-brainer. The dollar is the one that you want to be buying against the weakest one. Now you can see the euro was weak on all time frames. Pretty much the most consistently weak one all day. So, in a nutshell, you want to be looking to sell the euro dollar. You can do so there's really two methods that we look to sell. Pullbacks, which I would classify this as a pullback. Basically, you draw your trend line underneath the bar's lows, and when it breaks, you go short. This could be classified as a quick little 15 pip pullback. This could be classified as a little pullback that ultimately didn't work. You might have had a loss on that one. This one you might have had a tiny loss. And the second entry method that we use is a sideways consolidation entry, which you can basically see there, and you can also see here. Any sideways rectangle shape of 30 minutes. The longer the better. I like 2 to 3 hour ones. So this is a pretty decent one because it's at least an hour long, and it failed to go up. This one's a little bit higher odds because it's right near the lows, and it had even longer to go up, and it didn't. And you can see both of those resulted in nice moves. Now you could use a 5-minute chart, 2-minute chart, 3-minute chart, 15-minute chart, tick chart, but what I prefer is our range bars. And the best way, a range bar is simply a chart that's not based on time at all. It's based on pip movement. So I created a tool called the ATR. If you want to see what the average volatility on a 5-minute chart is, for example, from 3 to 12, you can add this to your chart. And the euro dollar moves about 5.89 pips per bar on average. If you want to see what the median is, in other words, half the bars are higher and half are lower, you can put that on there as well. So it's 6.98. So it's somewhere between 6 and 7. You want to, you might want to look at the chart with 6 pips per bar and one with 7 pips per bar and see which one you feel looks better. If you want to risk less pips, you'd use the 6 pips per bar. And so you would put 6R on the chart. And this will probably give you quite a few more entries than you saw on the 5-minute chart. The euro dollar was the weakest, the dollar was the strongest, without any shadow of a doubt today. So let's scroll back and look at some of the trades on here. Now the 6 pip per bar seems to have a lot more bars. You might want to go up to 7 pip per bar to just cut the number of bars down if there's too many. And so basically you have this nice little pullback here, which resulted in about a 15-20 pip move. Sideways consolidation here that didn't ultimately break out until a little bit lower, and that trade went down. You have entries right here, and I always put the stop 1 to 3 pips above the swing point high. You have entries here, and you can see when you're trading the weakest currency like this, there are a lot of entries. Even if you miss the first 5 or 6 trades, there are plenty more. 10 pips per day can double your account every 2 months, and these are considerably more than 10 pips. I mean, this one might have been 10 pips, 20, 30 pips, 30 pips, 40 pips, and here's a nice little 2-wave pullback that broke down. And you can just see on a pips per bar chart, you can, every time it makes a lower low and kind of consolidates like that, you can just yank your stop down, yank your stop down, yank your stop down, yank your stop down. And usually if you draw a trend line kind of off the highs here, when that eventually gets broken, it's usually the end of the move, as you can see. Did a pretty good job of getting you out. That was the low for about an hour. And here's a nice little hour and a half rectangle pattern. You have it made a lower low and pulled back right here. You have a trend line. Range bars vastly superior than regular time-based bars. So what else was strong today? Well, the pound was relatively strong. The weekly monthly trend are down, but from 3 o'clock until about 8:30, the pound was pretty strong. Now the euro had some strength from 6 to 9:30, but from 3 to about 5:30, you can certainly have traded the euro pound. This one I don't think moves as much as the other ones, So I'm going to put the euro pound on here with the 5 pips per bar. We're going to look at this from 3 to about 5:30. And 5 pips per bar may not even, be enough. You can see, not too many bars here. This currency doesn't move as much as some of the other ones. Here's 3 o'clock, kind of broke down underneath the low. And just look at how clean and beautiful this chart is with the range bars. Makes a lower, consolidates. And once it makes a big move down like this, usually it's going to stop at the fib target off the first wave. So this is an excellent place to get out. If you were continuing to move your stop down above the high, above the high, above the high, there's no reason to give back these extra 10 pips. When it hits that fib target, that's a big move. Most currencies tend to, at the very minimum, make 2-wave moves. After a 2-wave move, you're going to get some kind of a pullback, probably 80% of the time. So don't get stopped out and give back 10 pips. If it shoots through this area, get out at the second 1.618 fib target. But otherwise, don't be greedy. That's a wonderful, high probability, low risk, and much bigger win than you risked trade. You can see the Swiss from 3 to about 6:30 was pretty weak. So that means buy the dollar versus the weak Swiss. There's a dollar Swiss, 5 pips per bar is about a decent number of pips for that currency. It really got weak at 3:30, and so you're going to see a really nice little rally from 3:30. In fact, this is maybe a little bit too low. I'm going to go to 6 pips per bar. If there's not enough bars, add a little bit to it. So here's 3:30. It wasn't a downtrend. You can see it broke through that trend line here, and trend lines work really well on range bars. If you missed that breakout there, you might have got into this trade here with your stop underneath here. And you can see, went up, pulled back, went up, pulled back, you move your stop up. And again, don't get greedy. You weren't up too much in this trade initially, but when it hits the fib target on the next wave, you have a decent profit. If you got out at 8,800, you're in this trade around 45, you made 55 pips while risking less than 10. And you don't have to be right even half the time if you have big wins and small losses, Now the Swiss is a much better trade than the Australian, which also had real-time weakness today. The intermediate time frame trend was down and the daily trend shifted down at 6. But the weekly and monthly are pretty strong, so you don't know at the time that this trend is going to continue for many hours. You could certainly, you might not have watched it here. When you see a lot of weakness and then the pullback, there's no strength at all. You could then assume that you might make 10 to 30 pips on this trade here at 8:30. 8:30, the dollar was really strong all day, but has a little bit of weakness here. The yen had less weakness, so I would, be looking for at 8:30 on an Australian yen sell. It's very safe to assume you're going to get 10 to 30 pips on this trade because the Australian was quite weak, and then it had every opportunity to do a counter trend move, and it really had minuscule strength. So here's 8:30. You can see there was absolutely no pullback. This is a perfect example of what our rectangle patterns show. And like I said, you're most of the time going to make 20, 30 pips on this kind of trade. And so here's the fib target. It went kind of underneath there. Even if you got out somewhere up in the middle of this range here at 41, you're short a little bit. Well, let's just say 75. You made 30 pips on that trade, so a little bit more than I anticipated. And you can see that during that time, the Australian is just not that strong from 10 to 11 here, and the yen is very, very strong. And so if you miss that first trade, you have every opportunity to get into another perfect textbook rectangle pattern breakdown, and you're risking, if you really want to make sure you don't get stopped out with the noise, your stop has to be above the swing high here. It goes your way, you're in somewhere around 23, comes back against you and comes down. At that point, I'd move my stop down because false breakouts happen all the time, and once the trade goes and then immediately shoots back up and can't break this low, there's no reason to risk 20, 22 pips. Risk 7 or 8 or 9, but then you can see this move is continuing. So don't be greedy, draw your fibs on the previous swing, and even if you got out your whole trade here at 88, you got about a 35 pip profit. Again, while initially risking maybe 20 pips, but ultimately 10 very quickly within 5 minutes into the trade. Very high probability, low risk way of trading. that can, and you can see also the New Zealand's pretty weak today as well. It doesn't have the same kind of strength that the Australian does on the weekly monthly. So odds-wise and risk-wise, the New Zealand yen was also very high probability, low risk, trade that is very likely to give you many multiples more than what your risk is. You can see this one really started to go weak at 7. The yen really wasn't strong until about 8:30. Let's find 8:30 on the chart here. Here's 8:30 right here. So you would have noticed it right here. Could have sold the low, and if you got out of this trade in here, that's fine. Another nice rectangle pattern breakout, and just astronomically bigger profits, straight down move. Even if you short it right here, it's very easy to have made 50 pips or more on that last wave. You found out about it right here, and when all the time frames either line up or at least don't go against you, you tend to make more money. And so I always say this in class: go with the one that has the most red. You can see the weekly trend was slightly up at 7. The monthly trend was too. A little bit after 7, the weekly trend shifted down, and a little bit later, the monthly trend shifted down. So if you're in that trade and you start seeing weekly and monthly trend shifting, which it did not in the Australian, stay with the trade. You might get a 50 or 60 or 70 or 80 pip move, like you can see here.